Hello traders, the title of this video is The Fifth Wave, a Mind Game. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW traders for Elliott Wave Trading. Our website is www.24elliottwaves. Our main website is www.stochasticmarket.com. For all trade, it is very important for traders to stick to the 5% money management rules, okay, and apply stop loss in all trade. Very, very important. The mind game, the trading method, and the money management. You want to control the money management, all right? This is the key. Some traders, all they need to do is to focus on their money management, okay? You don't want to lose, and you don't want to lose big. Very important, all right? And you want to remain in the market. That's why it's very important for traders that purchase our systems that the first 2 weeks you test and retest the system. Please ask questions, contact us, send him the charts, all right? That's why some traders are doing, all right? I think that's the best approach. Traders who learn it the hard way are likely to remain in this messy market, all right? It's like going into the ring with, the heavyweight. And this is the trading. You are trading with the best trader out there, the best Elliott Wave practitioner, the best, momentum traders, the hedge funds, the investment bank, okay. You are trading, okay, against the best traders. So it doesn't matter your level, whether you are experienced, you are new, or you are average trader, you are competing with the best. So that's why practice is the key. And also give it a chance and have money management. Otherwise, you will be fighting, okay, throwing money into the market. All right. Let's go back to the main subject about the fifth wave mind game. As I say to traders, whenever you hear somebody talking about a mind game, we are focusing on other traders. All right. We are using a mind game, okay, to make a trading decision. All right. Sometimes traders do not look at the chart, but when they're about to make the decision, they use the mind game. For instance, if there is a very important economy news that is due, sometimes traders use the mind game. They may not place a trade, or they will wait until the news is released, and they will try to analyze and go into the mind of other traders and say, well, some traders are now under pressure. They must close their trade. They are forced to close the trade, and some traders will go and sell because they know that these people are forced now to close the trade. So they make a decision because of the mind game. What about the fifth wave mind game? Ladies and gentlemen, when we are talking about wave trading, we are using the wave principle. Now, we want to learn, which means by our head, learn by head, the theory. So this is about learning. Go to YouTube, go to Google, go to the web, read about the wave principle, Wikipedia, read about wave principle, go to 24 Elliott Wave, watch video about Elliott Wave. Now, you know it by heart now. The exercise that I'm doing now, all right, is about the heart, okay? So from the head to the heart, understanding what is taking place. This is about the mind game, all right? So very often, a lot of what I've noticed, I've seen some traders, they know a lot about Elliott Wave. They will tell you everything. They will even correct you and say, George, blah, 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 blah. But there are few, sometimes, they do not understand, okay, why the wave is saying why only the first, the third, and the fifth wave are standards. Why the fourth wave should not overlap the first wave. Why? So this is about the mind game. So when you start asking the question now, why? So Elliott Wave say fifth wave is the motivate. Why? Why fifth wave? When you see flat correction, all right, and then you say why the C corrective wave is divided into 5? Why? You start asking this question. Now you want to understand. You want to master the subject. You want to become an expert. You want to become a specialist. This is the exercise that we are doing to understand what is taking place. So, but the first thing, the foundation is about the head. So we learn it first. So it's very important to learn it. So based on the wave principle that stated that only the first, the third, and the fifth wave can be extended. All the Elliott Wave traders know that. So when we see now, this is about understanding now, when we see the first Elliott wave, and then the second Elliott wave, and the third Elliott wave, now we analyze each wave carefully, because when we are trading wave, we don't just count the wave, we analyze the wave, each wave individually, because a wave on one time frame can be minor wave of a higher degree. So we are analyzing each wave because of the fractal pattern of the wave principle. So we will analyze the first wave, we analyze also the third wave. We will also compare the third wave to the first wave, so we know what is taking place. Now, when we see that the first wave is not extended, the second wave is not extended, it will click straight away into our mind that there is a high chance, not certainty, not guarantee, all right? There is a high chance, we are talking about probability, that the fifth wave will be extended. All right? Remember that when the first wave and the second wave are not extended, there is a high chance that the fifth wave will be extended. In normal condition, ladies and gentlemen, the first wave is the longest wave, and it's usually extended, which means it's usually a complex wave that is divided into 5 subwaves during the motive wave. Now, so very often, the third Elliott wave can be extended up to 261% Fibonacci extension level, which is the horizontal line here, the 261% extension of the first wave. Now, if you don't know about Elliott wave, if you don't know about Fibonacci extension, go to www.dayprotrader.com. All right? So we know that the third Elliott wave can be extended even all the way to the 261% Fibonacci extension of the first wave. At least 161%. But if we see that neither the first nor the second, neither the first and the third are extended, we will expect the fifth wave to be extended, provided, repeat, provided that the fundamentals are solid. Repeat, provided that the fundamentals are solid. Without a strong fundamental, talking about the market cycle itself, the market sentiment, provided that we are in a bullish cycle, a healthy market environment. If we are not in a healthy market environment, the fifth wave may not be extended, provided. So if everything aligns for us, we are in a healthy market, and the first wave, the third wave are not extended, we will also check the stock itself, the management, the products, the competition, what's going on. In that case, we will expect the fifth wave to be extended. Why? So there are a group of traders that bought it first, price went up, price pulled back, invitation to buy during the third Elliott wave. They are expecting the third Elliott wave to be extended. It's not extended, but at least the third wave has achieved the length of the first wave, or equality between first wave and third Elliott wave. They say, all right, everything is in place. They are wondering now why the stock is not going up. So people will start talking and say that this stock has more to do. This stock is going to go up more. You see people saying that the fundamentals are sound, this stock is still devalued. But we are already in the fourth wave. So people will say that, no, this stock didn't go up too far so far. It still has a long way to go. That's where a lot of bull will come in now. The late comer will come in now, and they will start buying. Now, very often, when we have seen the fifth Elliott wave, the late buyers will be squeezed out because they are buying too late. As the third Elliott wave is already extended, and people have counted 1, 2, 3, 4, and the late comer are coming to the fifth Elliott wave, the fifth Elliott wave will not achieve the same length as the third Elliott wave. So it will be very short, and they will have a correction. But because these late buyers are lucky in this time, neither the first, neither the third were extended. So the market is expecting another extension, provided that the fundamentals are sound. And these late buyers will be rewarded, and they probably keep going up, and the wave will be extended sometime. A lot of ordinary wave traders can get caught, because that's why I say to trade the price, go step by step, do not assume anything, take profit at different stages. Because if the price is going to be extended, so you reach this level, price go up to this level, you see it's going to be extended. Suppose it was not extended when it reached this level. So people will say 1, 2, 3, 4, 5. At this point, some bear will start selling aggressively. They will say that this is the end of the fifth wave, this is the end of the multi-wave. They may force the price back down completely. But if the market sentiment is bullish and the fundamentals are sound, the bear that are selling here will be squeezed out. So then they will be taken out, and then we have the third subwave of the fifth wave, the fourth subwave of the fifth wave, and the fifth subwave of the fifth wave. And the fifth wave will be extended. Now, on the other hand, if the third Elliott wave is extended, or the first Elliott wave is extended, the fifth wave will not be extended. In most cases, it may not be extended. As always, we are talking about a theory, a wave theory. The reality of the market can be messy. All right? This is about the fifth wave, a mind game. I hope you have learned something from this video also, and will put into use, okay, to make excellent wave trading decision. I recommend to traders to go to our website, www.24elliottwave, and to check the video at Wave Genius. Until the next time, enjoy yourself and be very happy. This is about a fifth wave, a mind game. Speak to you soon.